Americans use credit cards to purchase a wide variety of goods and services, with each credit card having a preset amount that can be used for purchases. This preset amount is known as the credit limit. Credit limits are granted by the credit card issuer, and they vary based on the issuer's review of a number of factors. As card members use their credit card, they can make purchases up to their credit limit. Once the credit limit is reached, additional purchases may be declined unless a payment is made to bring the account balance down, which may open up available credit. The difference between the credit limit and the account balance is the available credit. If a card member wants to make a large purchase, or even a small purchase, and they don't have enough available credit, they may contact the issuer to request a credit line increase, also known as a CLI. When the request is made, the credit card issuer will review the request and consider several risk factors. These factors aren't available to the agent and shouldn't be speculated on with the customer, but is part of what makes up the criteria for determining if the card member is eligible. If the credit line increase is not granted, the credit limit, and therefore available credit, will remain the same. If it is granted, the customer will have a higher credit limit, which means more available credit and the ability to make additional purchases. Remember Joe from Phoenix, Arizona? Last we saw him, Joe was making a late-night visit to the grocery store to purchase some needed food items. Joe typically uses cash to purchase whatever he needs, but didn't have any, so he used his credit card instead. It turns out, when trying to pay, Joe's credit card was declined because he didn't have enough available credit. As a result, Joe was only able to purchase half of the items he had chosen. Joe's worries about his finances quickly turned to embarrassment, as this happened in front of several people that were in line behind him, causing a delay while he sorted through which items to purchase and which he couldn't afford. Several days later, after receiving his paycheck, Joe called Credit One Bank to pay his credit card bill. During the call, Joe talked about his embarrassing moment earlier in the week and asked if he could get a credit line increase so he can purchase more food and avoid that situation again. In Joe's case, after a brief review, he was approved for a credit line increase. Joe was extremely excited and grateful to receive this new spending power, as he can now purchase more necessities without worrying about having enough credit. The ability to purchase more items, like Joe needed to, is just one example of why someone may want a credit line increase.